Hey everyone, Catch Investor back to another video for today. So artificial intelligence, AI, the biggest thing since the internet. It's going to touch basically everything we do. Every industry that is here today will be affected in a positive way, in my opinion, from the rise of AI. Now, the global output GDP is going to grow with that as well. According to ARC's research, during the next 8 years, AI software could boost the productivity of the average knowledge worker by nearly 140%, adding approximately $50,000 in value per worker or $56 trillion globally. Now, of course, some will say AI is destroying a lot of jobs or will destroy a lot of jobs in the future. I'm more of the camp that says that AI will create more jobs, will create more opportunities, and will definitely create more output, which means growing GDP, which should usually make our lives much better as a whole. Now, in this video, I do want to talk about 3 companies that will be positively affected by the artificial intelligence revolution and are already seeing the positive effect of it today. I'm not going to talk about Nvidia, Microsoft, Tesla, none of those, but the 3 companies are pretty well known, pretty well established as well. Now, that doesn't mean that there is no huge potential ahead. No, I think that even with the size of these companies, various companies in various industries, by the way, there will be a lot of upside, whether it's through share buybacks, whether it's through dividends, or just growth from the company thanks to that new technology. So, company number 1 is going to be Adobe. Adobe is probably the number 1 when it comes to the creator economy. And so if we look at the big picture for Adobe, market cap of $234 billion, forward PE of close to 31 times. Now, overall, throughout the years, revenue have grown. Free cash flow has grown as well in the last 12 months, $7.42 billion. This is also why you see that the shares outstanding have been coming down for years now. So that increases the shareholders' value as well. Now, with regards to sentiment on Wall Street, the average price target sits at $540, which means there is just a 5% upside right now. There are still to report earnings. If it's a blowout quarter and increased guidance, probably the stock will react accordingly, and so will the analysts. Now, what are the expectations for next quarter? Well, revenue of $4.87 billion, so growing just over 1%. EBITDA of $2.44 billion, just under 2%. The same for EBIT. EPS on a GAAP basis, growth of 1.85%, which means $2.87, and EPS non-GAAP just under $4. Now, for the coming years, fiscal year 2024, overall growth expected to grow around 12%, and in fiscal year 2025, 12.7%. If we look at EPS, fiscal year 2024, close to 13% growth for EPS, and fiscal year 2025, 15.59%. So there's still growth there at the top and bottom line. Now, of course, with Adobe, it's pretty simple, right? You're a creator, whether it's in photography, animation, movie making, etc. Adobe has something to offer for you. And now with the rise of generative AI, they're definitely one of the biggest players there. Firefly, Adobe Express, Adobe Beta, I mean, you name it, they are there. Whether it's for documents, photography, video, Adobe has something to sell you. So there is Adobe Creative Cloud, which has grown 9% year over year to $2.85 billion. There is Adobe Document Cloud, which has grown 11% year over year to $659 million. And then the Adobe Experience Cloud, which has grown 12% year over year to $1.22 billion. And in my opinion, this is just the beginning of a new chapter for Adobe. Generative AI monetization is just starting to become something real. And for the years to come, I think they're going to monetize this quite well. As you've seen in the past, the moment they turned into some kind of subscription model, I mean, the stock and the business itself has just gone up like a rocket. Then company number 2, that's a company in the cybersecurity space. Of course, with the rise of AI, there are a lot of risks, right? You have to protect yourself for attacks, deepfakes, etc. So the need for more cybersecurity was just a given. And to me, one of the best companies positioned in that industry is Crowdstrike. Now, Crowdstrike currently has a market cap of $35.33 billion. It's not very cheap. Forward PE of 59.2 times, EV to sales ratio of 10.3 times in the next 12 months. But it is growing at a fast pace. If we look at sales growth for fiscal year 2024, expectations there are close to 35%, fiscal year 2025 close to 29%, and then fiscal year 2026, 26% growth for sales. If we look at EPS, crazy acceleration there. Fiscal year 2024, 55% growth. Fiscal year 2025, close to 30%, and then the same for 26. Now, if we look at the price target, currently the average price target from analysts sits at $179, representing a 20% upside right now. And here again, they are expected to report earnings on August 29th, so we'll get more information later this month. Now, when we look specifically to the AI solutions here, so AI-powered protection, the industry's most complete AI-powered threat protection trained on the trillions of events of Crowdstrike's security cloud and Crowdstrike world-class experts. So you maximize detection efficiency, broaden analysis impact, and save time and money. And this is where the trillions of events happen. So 2+ trillions events a day. 180+ million IOA decisions a second, and 3 times improved vulnerability prioritizations with expert AI. Now, if we look at last quarter's performance, total revenue was just under $700 million, which increased 42% year over year. Subscription revenue increased 42% as well. Annual recurring revenue increased 42%. And grew to $2.73 billion, of which $174.2 million was net new ARR added in the quarter. If we look at cash flow, that was $300.9 million compared to $215 million in the first quarter of 2023. Free cash flow was $227.4 million. And this is a little introduction to the next company. So they were granted an Impact Level 5 provisional authorization from the Department of Defense. Now, as for the expectations for next quarter revenue to come in at 724.3%, growing 4.5%, EBITDA growing 5.46%, coming at $145.65 million, and then EPS GAAP negative 6 cents, EPS non-GAAP 56 cents, which is down 2.16% quarter over quarter. And so while I do agree that you're buying an expensive company here, you have to look at the expected growth as well. If you look at the expected growth, if you look at a PE and growth ratio, you can see that this company is worth your while. Now, whether or not you buy before or after earnings is a decision only you can make. Now, before jumping into the last company here, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, so thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, company number 3 is supposedly the Messi of AI. It's a company very, very popular, of course, on YouTube, on X, in the market right now as well, and that's Palantir. We've covered Palantir a couple of times on this channel, especially after the latest earnings report, where there was some controversial announcements, right? The $1 billion buyback, why are they buying back shares when it was at $6, at $8? Why buy it back when it's at 18, now 15 and something? Why do they use the money like that? Well, first of all, like I said many times, this is just an authorization of the buyback. That doesn't mean that they're buying back shares right now. But I did ask on X what will happen if we reach the next quarterly earnings, and suddenly we notice that they haven't bought $8 in shares. Will the market react positively or will the market react negatively? And all of that is when the stock price stays at $15, $16 or so. Will you be happy or will you be angry, let's say, if they don't buy any shares back, if the price stays at $15, $16? Let me know down in the comments below. Now, when it comes to Palantir, of course, we know AI, this is something they've been dealing with for years and years when it comes to government, when it comes to commercial as well. So no surprise to see that in my list, even though it is an obvious play, right? I said I'm not including Tesla, Nvidia, Microsoft and the likes, but I did have to include Palantir here. Now, like I said in the past video, I think Palantir stock can go lower, and I think the analysts agree with me right now. That doesn't mean that it will go lower, because right now the whole market is going lower, so it's not really specific to Palantir. But if you look at the analyst price target, the average there sits at $13.83, which means most of them see it go down around 10.4%. Now, if we look a couple of years forward, we can see that sales expectations for fiscal year 2024 is an acceleration from fiscal year 2023. So we go from 16.13% growth fiscal year 2023 to 18.81%, and then even more acceleration to close to 21% in fiscal year 2025. Now, of course, if we look at EPS, there's way more growth there because, well, surprise, surprise, they're suddenly becoming profitable, which means they might be included in the S&P 500, which is also why they're focusing on that as well, which means that if they get included in the S&P 500, again, remains to be seen when that will happen, then some funds will be forced to buy the Palantir shares. Now, when it comes to EPS, fiscal year 2023 growth there, crazy, 283%, fiscal year 2024, 15%, then fiscal year 2025, 26%. Now, I do want to show you one last thing here when it comes to Palantir, and I compared it to Snowflake because I know a lot of people like to compare it to Snowflake. So you get here revenue, free cash flow, return on equity, and gross profit margin. By the way, this is on Coifin. If you would like to try it out, link is down in the description. Now, the one thing I do want you to focus on is down here, revenue per employee. You can see that Palantir's revenue per employee in the last 12 months is close to $500,000. Now, if you look at Snowflake, you can see that revenue per employee in the last 12 months sits at $351,000, which means Palantir is more efficient right now. Of course, you can clearly see here that Snowflake is growing faster than Palantir. But I want to show you something that Arnie made here. By the way, go follow him on X. So stock-based compensation as a percentage of revenue. You can see that Snowflake sits at 42% and Palantir was close to 40%, but has now come all the way back down to 21%. That's just under Datadog's 23% and just over the 18% of ServiceNow. Now, of course, for the last couple of years when it went public, we've heard that stock-based compensation is destroying shareholder value, which was true. But you can clearly see that over the last 2 years or so, stock-based compensation as a percentage of revenue has done the right thing. It has come down as revenue has gone up. And with the $1 billion in share buyback authorization, shareholder value could rise even more. But of course, me personally, I would love to see the stock go down more so that when they buy back their shares, it will increase my value even more. But of course, many people have other ideas when it comes to share buybacks and when it comes to short-term pain for long-term gains. But overall, these are the 3 companies I wanted to cover in this video: Adobe, Crowdstrike, and Palantir. All 3 companies will benefit heavily and are already benefiting heavily from the rise of artificial intelligence. Of course, do share your picks down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.